Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, March 20th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. And what you're going to see here is that the futures just had a big spike, I'm going to say about 40 minutes ago, and now they're starting to pull back a little bit. You do have the Ben Bernanke press conference today. That is really the big news coming out. The Federal Reserve having the FOMC, Federal Open Market Committee, holding its meeting on interest rate policy. So everybody should expect that the Fed is going to keep the pedal to the metal, and they're also going to say that interest rates are going to remain at 0%. That's the Fed funds rate, not the rate that the people pay, but the rate that the large banks pay, like JP Morgan, Bank of America, Wells Fargo, and Citigroup. They're going to keep those rates at 0%. And they'll keep up with their quantitative easing, $85 billion a month worth of bond and Treasury bonds, and also mortgage-backed security purchases. So that's $85 billion a month of printed money going right into the system each and every month. 0% interest rates for the banks. That's why you don't get any money on your savings account. Interesting, CNBC was just talking about, has the Fed already confiscated 10% of the savers' money just by keeping rates at 0%? And that is a really good question. I don't know the answer to that, but it might even be a little bit more than 10% when you think about it. So we'll see what's happening there. Again, you do have the problems in Cyprus still occurring, but looks like the can was pushed down the road a little bit. So I think everybody's waiting to see what comes out of Cyprus next. There's some chatter that Russia will come in and bail out the Cyprus banks. I don't buy into that one for a minute, but nonetheless, the market seems to be buying into it a little bit. There are a couple of other possibilities that are going to happen, but we really could care less. We just care about the market's reaction, what happens there, and how it affects the markets here, and that's really what's important. Also, you're going to get some more news a little bit later today. When the Federal Reserve makes their statement, you'll see what they have to say about it, if they do comment about it, what's going on in Cyprus at all. So that's something to think about. Also in the news, you have Freddie Mac. I believe they're suing 12 of the world's largest banks, including JP Morgan Chase, for LIBOR manipulation. So this is now spread over to the United States. Originally, it was just the European banks that were committing LIBOR manipulation. Now we're finding out that it was the U.S. banks as well. I don't think anything's going to come of it ever. The banks pretty much run the world. They'll just get a slap on the wrist, pay a little fine. Somebody will get some money, and that'll be the end of it. So we'll see how that all plays out. But, you know, there is definitely a lot surrounding the news today, especially with the Ben Bernanke press conference. So, again, futures are up 6 3/4 points to 15.49 per ounce. 15.49 per contract, excuse me, I'm thinking gold terms. But in any case, markets are higher. Now, here's the big news today before we get into gold and oil. It's FedEx. Federal Express just came out with numbers. They lowered their guidance. The stock is getting slammed. I mean, slammed. It was yesterday, it closed at around 106.50. Today, it is trading at 102. That's a big move for FedEx. FedEx is lowered guidance. They said that they're having, I believe, trouble overseas. So again, it looks like revenue is slightly above street consensus, but FedEx said that the conditions are very challenging due to international weakness. So again, this is very uncharacteristic to see out of FedEx, considering the transports have been leading these markets higher and higher. FedEx all of a sudden coming out with this. This should be the most important transport stock in the world, because they ship goods, they deliver goods by truck, they deliver goods by air. It's probably one of the largest shipping companies around. It's very strange to see FedEx say this. And one thing about FedEx, they're very straightforward. So they've never sugarcoated anything. And I think that's an eye-opener for people to look at, because all you have to see here is the transport index, which has been roaring and soaring. Take a look at this chart. I mean, look at the transports. They're just going parabolic since all this money's been printed, and now you get this news out of FedEx today, which is pretty important. I think traders should pay attention to it. but FedEx right now getting hit pretty hard. So we'll see if that one does fall lower when the opening bell rings. You also have UPS getting hit in sympathy to FedEx, so traders can watch that one as well a little bit later for a potential play. There will be bounces in these stocks. They're not going to go straight down, especially with all the easy money policies that are taking place around the world at this time. Couple of other things to talk about quickly. When we look at the gold market, you're going to see that gold is down about $3 today to 16.08 an ounce. Not a big deal. If we take a look at the GLD, you'll see it's at 155.64. Closed at 156.08 yesterday, so it is down a little bit from yesterday's close, but I'm not going to make too much out of it. GLD is still bouncing pretty decently from that low pivot that it made on February 20th, and I'll give it a little bit more upside bias from here. Nothing tremendous, but a little bit more of an upside bias. Let's take a look at oil this morning, light sweet crude. That's what we use here in the United States. That is catching a bid. That's up 77 cents to $92.95. Let's take a look at the USO ahead of the opening bell. You'll see a nice little gap up in the USO this morning. That is basically from a weaker dollar. Okay, so remember, when the dollar goes up, oil, gas, anything energy goes down, commodity prices go down. Today, you take a look at the US dollar index. It's been selling off pretty abruptly, and now the dollar is down by 24 cents as we speak. It was down even a little bit more earlier, about 30 minutes ago. But the dollar down, oil usually will go up. So that's what you're going to have to watch for going forward. So I think that's probably one of the more important plays in inverse relationships. The dollar has not had all that much of an effect on gold over the past 2 weeks, but prior to that, the stronger dollar definitely helped take gold lower. But past 2 weeks, gold is in its own little world. Now it's basically being viewed as a safety currency, especially if money starts to pour out of the European Union. So we'll have to watch for that closely. Now, real quick, the European markets this morning are all trading higher. As you can see, futures are up here in the United States, up 8 points in the E-minis. But you do have German DAX higher by 0.8%. France, Spain, and Italy are all trading higher by 1% at the moment. The Asian markets last night, the Nikkei 225 soaring and roaring again, up 2%. The Shanghai index was up 2.6%. So watch for the Asian ADRs to be strong, at least at the start of the day. I think the Chinese and Japanese ADRs could be strong at least at the start of the day. I think the Indian market was down. Let me just check that again. Yeah, it looks like the Bombay Sensex index was down 0.6%. So not much doing there. But again, you got to be a little bit careful here with the Indian market, at least at the moment. But we should see higher prices, at least in the Chinese and Japanese ADRs at the start of the session. So we'll see where we go from there. There are some gap plays today. We've got about a handful of gaps that we put out in the chat room. So those of you that like the morning gaps, please come over to the chat room, try it out. We'll have about 4 or 5 gap plays out there today. All right, with that said, everybody, I want to wish you all a great trading day. We'll see how this market plays out. But again, be a little bit on the cautious side. FedEx with the big warning. I don't know if it's going to take its effect today with the Federal Reserve meeting. But after the Fed, there should be fireworks. Markets will have some volatility the first couple of hours. It will slow down. Today's meeting, I think the Fed is going to make its announcement at 2 o'clock. And then at 2:30, they're going to hold a press conference. So, again, the markets could be a little bit on the quiet side until that. But usually we'll get that first 90 minutes worth of good action and volatility in the markets. All right, with that said, have a great trading day, and we'll see you all on the charts. Take care now.